Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook and your host for about the next 20 minutes here on Options Guide TV. Well, markets have done a little bit of a whiplash. Down, then up, then down. Most befuddling thing, I think, is what's happening in Disney. We see Disney down today. I was looking at Disney thinking about doing an earnings play on it, but I thought they might have a strong quarter. And they did, and guess what? The stock got beaten up. So, the company is battling back. I'm going to say a solid earnings report, and we see the stock down 5% today. I do think it might be a buying opportunity in Disney. They're talking about his successor, but we always knew that was going to happen. So that shouldn't be a surprise to the marketplace, but that did come up in the earnings call. So the dead cat bounce, I'm scared to add it to our deep in the money portfolio. I feel like there's other stocks that have different growth in there. But I don't mind it for that. $100 stock, it's possible to buy a deep in the money option contract, thinking that we might get some stability in the stock, and they got everything in place. The company's in a better spot, as mentioned. They're in a better spot than they were 3 years ago. But if we look at the chart, there's just not a lot of excitement here. We're down to 104. Yep, no, I'm sorry. Let's go to the chart and we look at it here. Down to 104. 102 is obviously a bottom, and if we hit that today, it's hard not to buy a call or something, because there's really no end of this downturn right here. I guess, that is the bottom. Again, that is the bottom of that channel, isn't it? If you think that's where it closed and that's where it opened. 101. Let's zoom in. Let's zoom in here. We zoomed in and then we didn't zoom in. 101.80. 101.80 looks really interesting. Came up and bounced off of that. Came down, filled that gap. Yeah, 101.80 looks really interesting on this chart. The stock is just not strong. We're below the 200. We're not even close to any of the moving averages at this point in time. There's got to be, if we get down to this area, I could see just even buying a long call, out of the money call, and give yourself just a little bit of room to run, to see if you can get the bounce back at least to the bottom of the 20-day moving average. But bounce back to it, you would hope that you would bounce back to where the bottom of this period of consolidation is, which is the 108 level. That's what would be the target. But look at all this area right through here. This is a real interesting area for that underlying stock. Huge gap got filled, then it continued on up. Yeah, all the way through. And that's going back to April of 2025. Yeah, interesting in Disney. Interesting without a doubt. Okay, so let's go into NVIDIA. Still battles. Stock is only down because of the Warner Brothers situation. And there's going to be, I guess, a vote here shortly. And the vote isn't going to be what option should we take. Should we go with Paramount or should we go with Netflix, Warner Brothers? But they're going out to their shareholders and say, do you want to do the Netflix deal or not? And it could happen as soon as March. There's still going to be some trials and tribulations on it. I still like the stock, but the only thing is that I'm a little bit concerned about in our Netflix trade is that we what am I trying to say? That it might hang on the company for longer than anticipated. The bid if the vote is positive, I would assume that the stock would bounce a little bit because the market likes certainty as opposed to uncertainty. But I'm a little bit also worried about just time decay withering away at us. We see that our short call options are trading for about 12 cents. If they get down to a nickel, we're going to close it, and we have an order in to close at that level, and we would take that trade off, and then we'd go back and sell some more. So in the short term, I'd keep selling premium against it, but I don't know if that's enough to set off the time decay on the position. But everything else kind of, looks solid. FedEx has bounced back strong. We had it at the 280 call option is now up 38%. We bought it for 43. It's selling for 59. The stock, where is FedEx exactly? Do I have it? There it is. 331, and we have 11 days until expiration. So we got to keep a close eye on FedEx, and that if it hits 335, we're going to roll this position. We're not going to let this thing get in the money. And that is inside the options playbook. I talk a lot about how you want to roll and when you want to roll. You can do a preemptive roll if you would like. And I don't mind that. The stock today is up 8. I don't know if I want to wait till Wednesday to do the roll. Is what I'm thinking right here. Is that this is a strong move up on a percentage basis. It's not that huge, but we got 11 days remaining until that expiration. So we've zapped out a lot of the time decay in FedEx. We're up 2.5%. But do I want to wait until Wednesday? Because we usually do the trades on the show. I would personally, I would have an alert set for 335. And if we hit 335, I would roll. I'd roll instantly. I wouldn't think about it. I would roll up and out. Or the other alternative is that you just take your profit and you close this one and you close that one, and you just remove that trade. Now, if it gets deep in the money, I will do that. If I fell asleep on a trade and all of a sudden you woke up and FedEx is trading at 345 and it's 10 points in the money, it's very hard to roll that trade. So you need to do it either where a preemptive roll prior to it reaching the 335, or you do it at 335. You just don't let it get in the money. If you get more than 1 or 2 points in the money, it's very hard to roll an option contract and be able to get it done for a decent net credit by going up and out in time. And I have a chapter inside the playbook in the managing your position section of optionsplaybook.com, or also inside the book in the back end of the book, talking about managing positions. How I think it says how we roll is the title in the book, if you want to look at the index. Okay. That's where we're at with FedEx. Let's look at, we have Uber trade on right now, and we put that together on Friday. So let's go to the options grid and let's look at our Uber trade. Uber's up a little bit. So UBER, 1 second. Let me grab the trade first. We're looking at the February 6th expiration. Earnings are Wednesday morning, and we bought the 81 calls, so 2 of the 85s. So we bought 1 of the 80s, sold 2 of the 85s, and then we bought 1 of the 87s. All right, so we put this on for about a 95-cent net debit to the account. And so we're up a dime on it. We're at 106, and I would expect that to be the case, because here's the thing. So now we're up $1.25. We were below the 81 level when we did it, but why isn't it up more than a dime is the question that I would answer, right? And the fact is that the implied volatility is now starting to anticipate that earnings report. So vol is up, which means these 2 short option contracts are going to be very expensive to buy. Part of the reason why we like butterflies is that after the earnings report, 99% of the time, the implied volatility goes down. So you buy this, you sell 2, you buy 1. And in this instance, we are still targeting our 85 level. We would like it to get to that level, but if it goes beyond 87, we're still fine. And I'll send this to the what if calculator. And if we go beyond that, if we put it on for 95 cents, the butterfly has to trade for $2. I think we rounded it off to $1. So we'd be up $1, well, $1.05 if we put it on for 95 cents on Friday. And we would be up $1.05 anywhere above, because this is using today's prices, by the way. So anywhere above the 80 strike, we can make $1 on the trade. If it goes out right here, the most that it can trade for is $4 minus that $1. You're looking at $3 up here at this precipice, and anywhere in between here, we can be profitable. This is an area of concern, though, if it lands somewhere in here after earnings, mainly because you can always bounce back and you can be in the negative quickly. We would like it to make the expected move at least to the upside after earnings, and then kind of drift back and land somewhere close to this. That would be the ideal situation. You open up here on Wednesday, well, I guess Thursday after the earnings report, because they're going to announce after the close on Wednesday. And then it starts drifting back this way and closes somewhere close to here on Friday. All right. Uber. Okay, let's look at Google. Now, I mean, we got a few other stocks that we can look at. And if you have any questions or comments, please do put them in the chat box. This is an interactive show. Happy to address anything that you might have. I do like the Uber trade. I like that this is trading for $1. You can do, I mean, we always talk about one lots on our show, but if you're looking at, especially earnings trades, they're not meant to be recommendations. I got to give that disclaimer in general. But a simple little 5 lot is an easy trade to pull off on Uber heading into the earnings, and the potential to double up if the stock makes at least the expected move to the upside. You're looking good. Now, obviously, your risk is if it goes down, there's not going to be much left. And if I put this trade on and after the earnings report, the stock, let's say, meandered lower, I would get out of the trade right away. And that's what the butterfly will reward you with. Even though vols will come in, it still will hold a little bit of its premium, and it allows you to escape maybe for down 50% on your trade or whatever. If the earnings are really bad or perceived as really bad, we have a short-term option contract, and they're all going to expire worthless. Okay, that's simple. So what's our plan? Our plan is we put the trade on Friday. We put it on for 95 cents. Market's at 81 now. It's going in the right direction. We like that it's going this way. If the market opens up more than the expected move, and I guess we can go look at what the expected move is, 330, and we'll call it 720. We'll call it 720. We'll call it $7. 8. So if we buy this one and we buy this one, we look at the midpoint of it, we're fairly close to $7 on the trade. If you just look at, extrinsic value would be the best way to look. Almost $7. 343 plus 335. So you're looking at 88 here. If the market opens up that expected move, and expected move, remember, doesn't have any regard to direction. They're just saying based off of the prices of the options, the over-under after earnings heading into this Friday's expiration on February 6th is going to be a 7-point move to the upside or downside. I got to emphasize that. But yeah, so this covers all those bases. So you would ideally like to see it open at 88 and then drift back to 85. That's the least stressful way that the underlying stock could trade. Now, if I go in and look at earnings on Wednesday, we have Alphabet announcing after the earnings report, i.e. Google, we have Lilly reporting in the morning. That could be an interesting one too on Wednesday. That might be an interesting trade to look at. Another butterfly in. And then we got Amazon on Thursday. So we're going to hold off to do a trade on Amazon on Thursday. And Amazon, I think, had a real strong move today, if I remember correctly. Checking the markets out this morning. It should be in my symbol list. Anyways, let me add it. There it is. Yeah, it's up 4 today. Not a big move. It was stronger earlier. 1.69%, but it is up, and that's a solid move to the upside. And we see Google also doing pretty well. Ford will be an interesting one. When are they announcing earnings? On the 13th, which is 11 days away. Well, the expiration is 11 days away, so it'll be sometime before the 13th. We could look at a chart. I would really like Ford to just get going. I kind of feel bad that Ford's. I mean, it's made a strong move, but man, this stock's been trading around $10. I feel like for years and years and years and years. The PE ratio trading at 10 times earnings. The earnings date is on the 10th, so 8 days away. Let's look at a trade on Ford next week. I want to give some positivity to the stock. And it would be an earnings trade. I still don't want to buy it long, even though I wish that it was a little bit more attractive. But they've been doing some good things. So they got up to as much as $25 on February in 2022, the beginning of 2022. Got all the way back to there. It'd be nice to get back to that range. Just doesn't get the respect it deserves, I think, Ford. Good company. Okay. Yeah, I guess we'll just look at Alpha. Well, we could look at Lilly, and we could do Alphabet then on Wednesday, and we could do Amazon on Wednesday. So let's take a peek at Eli Lilly. All right. Up 1% today. Got an expensive underlying. Market's resilient today. All right. Yeah, let's stay bullish on it. February 4th expiration. Got all day Wednesday, all day Thursday, all day Friday. $1,000 stock. Just doing a one lot will be interesting. Markets open interest is just medium in it, but the butterfly will help. Let's go. Expected move is 60. 32 and 32, so 65 we'll call it. And that puts us right at probably the 120 area. So let's try going 160. Sell 2 of the one. Let's get up higher than this. So 110 would be 60, 115. We can go a little higher. We can make it a little cheaper. Yeah, let's do the 170 here. Okay, so let's go 170. You are not making me happy here. LLY, moving slow. Okay, 170, 180, 1,070, 2 of the 1,080s. Come on. All right. And then we'll stop short on the 1,085 and we'll buy that one. Means it's got to be worth $5. And if we can get the software to move, we should get a price on it. And we'll try sending it to the what if too. 18, so you're going 22, 23 plus 20 twice, and 17 here. Yeah, that should be a decent price on this. Come on. All right, I'll just let it try to catch up here. But that I like to trade in Lilly. I obviously they've done well recently. The chart is strong to the upside, and just a lot to do with their weight loss drugs and everything that's involved in that period of consolidation. And let's stay in this range here. Downside, obviously, we're looking at this low here, which is kind of attached to this high down on this end, 975. Hanging out in here. Upside here at the high end of the channel is 1,132. Yeah, I like the potential on this earnings report as a catalyst. But I need the... We'll just do it real quick. Let's go in and do let's do the math. Okay, 1995 plus 2, because it's not populating the math down here, and then we'll call it a day. And then we'll look at Google and Amazon, or we'll look at Alphabet and Amazon on Wednesday, and then we'll take a peek. We'll obviously know what happened with Uber and Lilly on Wednesday morning. Keep a close eye on FedEx. If you had that position on, you don't want to get in the money. It's 331.20 right now, so it's tempting to roll it. We're really close. If we were at 333 or 334, I would definitely roll it. I think I'm going to wait until Wednesday and see where we're at. But ideally, you roll before it gets to that short strike. 1 week out, right? We sold some good premium in it, and then the bounce backs happened almost instantly after that. UPS is announcing earnings here somewhere too. They might have announced this morning. I don't think so. I don't see them in the list. Palantir is tomorrow. That should be an interesting one too. Let's go. Oh, after the close today is Palantir. Okay, still not calculating. So the 1,070 is 23.35. So this is the column I'm going to look at. I'm just going to work off the mid prices here. 23.35 once, and then we're going to sell to, we'll call that 40. Well, it'll be 39.90. And then we're going to add this one here, 1780. $125. Yeah, that's, if I did that math right, that's solid. You got 10 points of upside, $125 worth of risk, and above 185, which we're at, there's a 35% chance of being above 185. February 4th expiration. Oh, February 6th, 4 days away. Yeah, and they announced Wednesday. The only downside about the Lilly trade is that, well, obviously you got the risk to the downside, but the biggest thing about the Lilly trade is they're announcing on a Wednesday, and it's $1,000 stock. So even though vol premium will come in, it's looking right now at a 70% implied, where historical's down around 40. Even though vol will come in, there's still going to be a lot of premium left over because it's an expensive underlying stock. But man, I wish this trade would just take off. Makes pulling the trade a lot easier. So let me make sure that's right. 125 at the midpoint. Okay. 95 times 2, 39.90 minus 24.55 and minus 18.40. Yeah, $3. That makes more sense. Okay, so it's 305. And that's still that's the price that I would expect to pay for it. You have $7 worth of upside. You're paying $3 up front on the trade. If the market moves more or moves the expected move to the upside, it's going to be trading for 5. 5 minus 3 means you make 2. So if we're above 1,000, we don't have the profit and loss graph to show you, but I can do the math very quickly. The long strike is 10 points. The short strike is 5 points, or the short spread is 5 points. So 10 minus 5 means that if it's above 1,085, then it has to trade for $5. If we can pay $3 for it, it's saying the midpoint is right around 305. If we can pay $3 for it, if it blows away through the strikes to the 1,085 level or beyond, you would make $2 on the trade. If the market goes down, you could lose $3. If it lands somewhere in the middle, you can make as much as $7 if it lands right at 1,080. Obviously need a strong earnings report to the upside. We're up 16 points today, or 1.6%. And we'll leave it there. My numbers are moving, but my trade is not showing up down below. And I can't give you a good answer as to why. Paper trading portfolio. Definitely keep an eye on the FedEx trade. Netflix, I don't mind buying this one back. Stock is up today, though. The market is resilient today, that's for sure. Where's our VIX at so far today? Our VIX is still hanging around the 17 level, but it's down a little bit, 1676. So I guess the concerns about government shutdown and all that other stuff is just moot at this point in time, and that's where we're at. All right, that's it for this edition of Options Guy TV. We'll come back on Wednesday. We'll review the 2 earnings trades that we put on. We'll look at a new trade in Alphabet on Wednesday, and then Wednesday after the close, Alphabet will announce, and then on Thursday after the close, we have Amazon. So we will do some type of butterfly for sure in Amazon with only 1 day remaining to that expiration date. See you then, 11 a.m. Eastern time for the next edition of Options Guy TV.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.